Hey, what's up guys, John here. The Fed did not cut interest rates today, and in fact, it doesn't look like they're going to be cutting rates anytime soon.
No change. The Federal Reserve holding rates steady.
Today, the FOMC decided to leave our policy interest rate unchanged.
Many people are betting on a rate cut today. Many people are even saying it's going to definitely happen in March. I made a prediction on this channel last year saying that there's not going to be any rate cuts anytime soon, not any cut in 2024. If anything, we're going to see rates go up by 25 basis points, at least once, possibly twice. At that time, many people thought that that would not happen, and I was completely wrong. And I was even getting labeled as a doomer, saying that, you're doom and gloom, saying that rates aren't going to get cut. But if you look at what's actually happening, you look at what they're actually telling us, you can see factually what's going on. I mean, look at this, for example. I think this is crazy. You tell me. Now, they say, Janet Yellen says the economy is clearly performing very well, right? Economy is very clearly performing very well. Job market is showing that our unemployment right now, we have the strongest job market in 55 years. Do you believe that? The strongest job market in 55 years in a booming economy when the CEO of Kellogg is saying we got to reach consumers where they are, advertising cereal for dinner.
We got to reach the consumer where they are, so we're advertising about cereal for dinner.
Right? The best job market in 55 years, why would you do such a thing? Well, maybe it's because we're not. Maybe we look at the Bureau of Labor and Statistics data that was supplied to us last week, and you'll realize that the job numbers and the information which they supplied us today is completely wrong compared to the Bureau of Labor Statistics, according to what they are telling us. So why would that be? Could it be because the U.S. economy is gradually but surely getting driven off cliff's edge, and with it, the U.S. consumer? Well, in this video, I'm going to break this down. I'm going to show you exactly what's going on. I mean, look at this. You tell me. They say we added 192,000 jobs in April, right? Came out today, May 1st. Then, and this is 8:15 a.m., then 2 hours later, at 10 a.m. today, why hundreds of U.S. banks may be at risk of failure. Why would that be in a booming economy? It doesn't make any sense. Last year, we had, 5 banks fail? Silicon Valley, Signature, First Republic, PacWest getting acquired by Bank of California, Credit Suisse issues. We had all of those things, and everyone was going berserk over it. That was just 4 or 5 banks, hundreds. Imagine what that would be like, right? And so the more you look into this, the more it makes you scratch your head, wonder what's really going on. Well, in this video, I'm going to break it down and show you exactly what's going on to help you and position you, because I believe that a educated consumer is a strong consumer, in some regard. Strength is kind of relative when I'm going to show you a video. Someone's talking about $30 mayonnaise and $18 frozen pizzas. But the better information that you have, the smarter decisions you can make, the more educated and informed decisions you can make, and I think the better off. So please hit the like button. Hit the like button. YouTube will share the content. Educate more people what's really going on in the U.S. economy. And if you'd like to fix your credit to position yourself for funding, maybe to invest in distressed real estate, get a business loan, maybe buy a car, a work truck, you have some goal that you want to achieve and you need funding to achieve it, we'd love to help you at GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for tomorrow. Take a look at this. So the U.S. economy lost 192,000 jobs in Q3 2023, according to the BED report released by the Bureau of Labor and Statistics last week. BD data tracks quarterly changes in employment at all private businesses in the U.S. economy. Meanwhile, the U.S. non-farm payroll data showed that the U.S. labor market added 494,000 new jobs in Q3 2023. This is a whopping 686,000 difference in job count over just one quarter. The BED data from the BLS suggests that the final labor market revisions released in 2025 will be much lower than the headline reported job numbers. What is happening here? Now, they said here that there's a large disconnect between data and reality. And then, you have some people making their own predictions and their own assessments of what they think is happening. But you look at this, it's looking very, very different than what we're being told, right? You have tech jobs. You have 70,000 tech workers getting eliminated in April alone. 70,000. Now, I heard about this new AI online. I thought it was very fascinating. I think it's going to be, once this actually takes hold, I think it's going to be the end of 500,000, 1 million, 2 million jobs. And what this AI is all sales reps, let's say for example, if you're hiring in Serbia, in the Philippines, Pakistan, India, they have an accent, of course, inside of their native country. Just like we have an accent if we go over there. And that accent with this new AI would get eliminated entirely. So a sales rep in America could be outsourced to Serbia for $4 to $5 an hour using this AI. And so when you start to see what is likely going to be happening here, you're going to start seeing a lot of companies beginning to push more and more and more jobs overseas. You're going to start to see the unemployment rate rise, like the real unemployment rate really, really rise. And you're going to likely start to see a lot of opportunities flow outside of America as AI and tech and all of this really starts to ramp up over the next couple of years. Now, fascinatingly, like look at this. Laying off hundreds of core employees, moving some positions to India and Mexico. India and Mexico. I mean, look at all these companies that are issuing layoffs right now. Microsoft and Cisco, American Airlines, IBM, Salesforce, Yahoo, Expedia, BlackRock, Amazon, Spotify, Citigroup, right? You have PayPal, all these different companies issuing all layoffs in the hottest job market in 55 years. Now, what I find very fascinating here is this. Look at this video, because I wonder, how bad is our inflation compared to other countries? Because if you look at what's unfolded the last 4 years, America has followed very similar policies as a lot of other countries. Heavy stimulus, lower interest rates, trying to really spur an economic growth and really an artificial and unorganic economic growth to flow a lot of money to large corporations, right? And when you start to see this, look at this.
$8.50. Nothing to be Cheerios about that.
$8.50.
Fuck, these prices are getting loopy.
$10.
$18.
$18 for frozen pizzas. $18 for frozen pizzas. And this is Canada, right? This is January 16, 2023 food prices. Inflation 2.0.
A brown pizza.
Right? So you can just imagine what's happening now. Then, look at this. This is Australia. This came out, today, right? Both of these actually came out today. So 1 hour ago. Now this, look at this, Australia.
Holy shit. I just went to the supermarket then to get a coffee with my mum. First of all, the coffee was $9. Second of all, holy heck, shit is getting expensive. $30 for some frickin' mayonnaise.
$30 for mayonnaise. $30 for mayonnaise. I remember having a conversation with someone 7-8 years ago talking about how much engineers make in Los Angeles. And back then, he was telling me they make about $30, $35 an hour. And there's opportunities to go to $40, $45, $50 an hour, as you start to get seniority inside of your position and advance. I'm like, okay, now $29 for mayonnaise in Australia, right? Look at this.
And I thought, you know what, I might as well get some fuel while I'm at it. $2.85, now you're really taking it.
Per liter, right? Per liter. So that's about $8, a little more than $8 here in America. In Los Angeles, a lot of other cities, you're seeing gas now $6, $7, some even closer to $7.50 a gallon, right? They say the prices have risen 20% over the last 4 years, 20%. But then when you start to peel this back, you'll start to realize, did it really increase 20%? Because when I look at my car insurance bill, when I look at all my expenses, I'm seeing prices go through the roof. Like, it's absolutely crazy right now. And I'm seeing a lot more people trying to apply for jobs, with me. I'm seeing a lot more people, even with my friends' companies, saying a lot more people are applying, people are more desperate, and a lot of the employees are really trying to, go above and beyond to make sure that they have a spot there, to make sure that they're going to be able to weather a storm. Now, look at this. They say the average U.S. car insurance premium was $1,470 in 2019, $1,470. Now they're saying it's $2,300, right? So car insurance as a whole has went up 63%, 63% inside of 5 years, 63%, right? That's definitely a lot more than 5-6% a year. Then you have rent in 2018, $1,000, and they're saying nationally the average, this is for all bedroom properties in America, the average is $2,100, right? So that's an increase, it's literally 100% more, right? It's 2 times that price. It's increased by 100%. And so then you start to look at this across food. Grocery store prices, they predict, they're 25 plus percentage points up. Now, here's my belief about what is likely going to happen here. I believe that the data throughout the year is going to show that inflation is just getting a little bit more stubborn. It's a little bit more than we anticipated. And because of this, we have to keep rates where they are. In fact, we might have to increase rates one more time. The U.S. economy can withstand this pressure. And then what I think is likely going to happen is going to put more pressure on banks. A lot more pressure on these banks. Now, 1,804 banks took out bank term funding loans, and that's a 12-month loan that expired on March 11th, right? So about a month and a half ago. So they have about 10 and a half months for these 1,804 banks to pay back $161 billion. Now, these banks have investments. A lot of these banks, have made these quote unquote investments in securities and bonds and commercial real estate and these loans, a lot of which are performing very, very poorly. So the bank term funding program offered them, say, look, you know what? You made this investment for hypothetically $100 is worth 60. We'll give you 100 for it now. And then in the back end, you give us the 100, when this expires or after the loan expires. Then they're going to raise rates or keep them higher. There's going to be a lot more inventory, a lot more distress. Funding is going to start to tighten up more and more and more. The losses are going to continue to erode. Banks aren't going to have liquidity to pay them back. The banks are going to either fail or consolidate. And with it, then they're going to start to, all at once, they're going to start to say, okay, we need to step up. We need to figure out this solution. And then surely we will see this economy head south. I don't think we're walking into a scenario where it's just going to be like a nice smooth recovery. I think that the U.S. economy can't recover from here. The U.S. consumer, rather, cannot recover, not the average consumer. Because when the average consumer is struggling to feed themselves, and inflation, the policies in which we're walking into are going to be inflationary, how are they going to be able to recover when we have record high debt across auto, across student loan, across credit card? I mean, we have over $1 trillion in credit card debt. At these interest rates, most people are barely making the minimum payments. 30% of American consumers in the top 100 cities are behind on at least one bill right now. We've never seen anything like this. So how are we going to have some great recovery? We're not. We're walking into a consolidation of wealth in this country unlike anything we've ever experienced before. And I think all we can possibly do to position ourselves is what I've mentioned in the past in these videos. Like really taking this data and information and making a smart, well-informed decision based on facts. That things are not going to get easier. No one's going to be here to save us. And if someone does throw a life vest or a life raft to save you, they're going to have more to gain than the person grabbing that raft. So the only thing people can do right now is getting out of high interest rate consumer credit card debt, because these interest rates, you bust out a credit card interest rate calculator and you look at these numbers, you'll realize you borrow 10, 12, 15 grand and you're going to pay back 60, 55 grand. People are going to say forget it, right? But if you borrow that 12 grand or 10 grand and you're able to do a balance transfer and transfer somewhere for, let's say, that 12 grand at 0% APR for 12 months or 24 months and pay $600, $700 a month, at the end of that cycle, you're out of debt interest free, right? Putting yourself on the fast path to getting out of high interest rate credit card debt and high interest rate debt, I believe, is number one priority for a lot of people right now that are looking to get ahead. Because many people, they'll have 10 grand in credit card debt wondering how they can invest 5 grand. I can promise you this. If the interest rate on your credit card is 27% and you have that 10 grand debt and you have 5 grand in the bank that you want to invest, there's not going to be any better investment than throwing it towards that credit card debt. Because most people are hoping to get a 5, 8, 10, 12% return on investment. How does that make more sense to chase a 5, 8, 10, 12, 15, 20% return on investment when it's a guaranteed 27% interest on the credit card, right? It doesn't make any sense. Really buckling down and paying down debt, putting yourself in a really strong business, or working for a really great company, a strong company, and putting yourself in a place to where when things do hit the fan, you can get funding and you could move. I also think another really big trend that's going to be unfolding this year and next is going to be people that are making 100 grand, 200 grand, 300 grand, 400 grand a year online saying, you know what, look at the direction of America. I can only imagine what our future is going to look like. It might make sense to, get a passport, a citizenship, a residency in a different country, kind of hedge their bets. I think we're going to start seeing a lot more of that too. I think as a whole, America is being intentionally, pushed into a really challenging spot. One spot in which we've never experienced in our lifetimes that I think all of us need to get ready for. What do you think about this? I mean, what do you think about this data? Everything that they're supplying us with is pushing us in one direction. Let's have a conversation about this below. And if you'd like to fix your credit to position yourself for funding, we would love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you're thinking about doing a balance transfer, you have to make sure that your credit score is in a place where you're going to get approved for the balance transfer. You're not going to get approved for $1,000 or $500. You're going to get approved for the balance of what you want. So the higher your credit score, the more likely it's going to be that you're going to get approved for the card in which you would like to get accepted for. So if you have any late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any issue at all in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for tomorrow. Catch you next video.